Credit reporting and scoring. Materials provided by Genesis Financial Management. Credit reports are a financial report card. It's just like you're back in school, you're still being graded, and the results are still critical for your future. So what's a credit report? It's a summary of someone's history of paying debts and other bills. It's prepared by credit reporting agencies, also known as credit bureaus, used by those who have a legitimate need for this information, like lenders, insurance companies, potential employers, or potential landlords. The better your credit history, the better your chances of obtaining a loan or a credit card, obtaining lower cost credit terms and saving hundreds of dollars of interest, of obtaining a low cost insurance policy, of renting an apartment, or being hired for a job. Here are some interesting facts. Over 2 million credit reports are issued every day. Over 2 billion items of information are added to credit files every single month. More than a quarter of credit reports contain mistakes which could result in credit denial. Things such as commingled information from another person, bills wrongly listed as delinquent, or identity theft. There are 3 major credit bureaus: Equifax, Experian, and TransUnion. Each credit bureau has different pieces of data about borrowers in their databases. The Social Security number acts as a magnet to assemble data and create a credit report. 4 main parts to a credit report. Identifying information, things such as your name, your Social Security number, current or previous addresses, birth date, and employer. Public record information, things like liens, foreclosures, and bankruptcy. Credit history information, list of loans and credit cards, timeliness of payment, defaulted payments, negative information, which will usually last 7 years on your credit report. And inquiries. This happens when a creditor pulls your credit report. The inquiry will remain on your credit report for 2 years. What is not in a credit report? Bank and brokerage account balances, medical history, race, gender, religion, national origin, and your driving record. So how do credit bureaus get their information? Well, lenders voluntarily supply information to credit bureaus on a regular basis. Information in credit reports is used to make informed lending decisions. It's not like 100 years ago when lenders knew every borrower personally. Lenders often will review your credit report regularly for signs of trouble. They may raise your credit interest rate as a result. How to get a credit report? You can get a free credit report from www.annualcreditreport.com. It's also free if you suspect that you are the victim of identity theft, you receive public assistance, you are unemployed, or you were recently denied credit based on your credit report. The required information to get a credit report is your full name with middle initial, current address with previous addresses for up to 5 years, your Social Security number, your date of birth, and your current employer. Check your report every year. Look for inaccurate information. Check that correct negative information drops off in 7 years, 10 years if it's a bankruptcy. To look for evidence of identity theft before making a major purchase so you're not delayed in a home mortgage or a car loan. What if there are errors? Well, the Federal Credit Reporting Act gives you the right to dispute incorrect information. You can use the complaint form that comes with the report. Send copies of documentation if needed. Creditors must generally respond within 30 days and correct errors. Make sure that the source of the error, for example, the bank or the credit card, corrects the mistake for each of the credit bureaus. Explain correct but negative information. The Federal Credit Reporting Act also allows consumers to tell their story in 100 words or less. Give both an explanation and a resolution. Here's an example. Payment was late due to lost mail, or account brought current immediately upon being contacted by creditor XYZ. Some negative information lasts forever. Criminal convictions. Information reported for an application of a job paying more than $75,000. Information reported for an application for credit or life insurance of $150,000 or more. Tips to avoid credit reporting errors. Be consistent in filling out your credit applications. First name, middle initial, last name. Don't alternate full names with nicknames. So if your name is Robert, don't alternate it to Bob. Always include senior, junior, third, etc. Beware of credit repair firms. They offer shortcuts to reestablishing credit, promise to erase negative information. However, they often encourage illegal activity by bombarding credit bureaus with disputes, applying for taxpayer ID numbers. Credit repair cannot be done. The better option would be a nonprofit credit counseling organization. Rebuilding your credit history. Review credit report and make it as positive as possible. Add a 100-word explanation if it can help. Get 1 or 2 credit cards secured if necessary. Charge small purchases and pay them off. Ask creditors to remove 4 to 6-year-old items. Only required delinquency is child support. What does it mean to have good credit? Well, it means that you have a record of previously borrowing money or using a credit card. Problem is, people with no credit history are invisible to lenders. You have a record of making at least minimum payments on time by the due date. You owe money that you are capable of paying back based on your income and assets. Common reasons for being denied credit: no credit history, past mismanagement of credit, too much outstanding debt. So what's a credit score? It's a 3-digit number calculated by statistical analysis. It measures the risk of borrowers' delinquency or default. Use increased dramatically since the late 1990s. 2001, Fair Isaac and Company began selling their FICO scores for $12.95. About credit scoring. They range from 300s being the worst to 800s being the best. Most people are between 6 to 800. 687 is the national average. If you're a prime borrower, you're between 620 to 660. It also depends on the lender. It's determined by statistical risk models. Models predict bill paying behavior. Mathematical gauge of creditworthiness. Credit scoring factors. Bill payment history. It's weighted to emphasize the past 12 months. It is about 35% of your score. Proportion of outstanding debt to available credit limits. This is also called debt utilization. It carries about 30% of your score. Length of credit history takes up about 15% of your score. Number of recent credit inquiries, that's about 10% of your score. And mix of the types of debt used, that again is about 10% of the score. Credit scores affect whether or not you get credit, what interest rate you'll pay. Subprime borrowers pay more. Under 600 is paying about 10% more than a person that is a prime borrower. Best deals go to those with scores of 720 or more. Rates vary depending on their risk tier from A to D. Risk classification can vary among lenders. Can be rated higher by one lender than another one. It pays to shop around. Ways to improve your score. Pay your bills on time. It's the number one weighted factor. Keep accounts open. Older accounts establish length of history. And keep debt to available credit ratio under 50%. Get a mix of types of debt, revolving and installment. Check credit reports and fix mistakes. Avoid inquiries. Supply your own report to the lenders. Consumer tips. Do shopping around within a 14-day period, 30 days for mortgages. The reason why is a quick flurry of inquiries only counts as one. Demand to know score lowering factors. Check out www.myfico.com website. Calculations will show loan savings by scores. Simulator shows factors that affect score. And you should monitor your credit reports annually. Mistakes in credit reports lead to mistakes in scores. So in summary, your credit score is a snapshot of your credit performance at a point in time. It changes over time as your credit behavior changes. Helpful credit score factors Old credit accounts, they show lengthy credit history, low balances under 50% of the credit card limit. Variety, bank cards, car loans, mortgages. For more information on how to get in financial shape or to make an appointment with a certified financial counselor, you may contact us at 877-202-9246. Or you can visit us at www.yourgfm.org.